Let's now take a closer look at telcos and whether this is the right time to buy. We're back with Lorne Steinberg for his thoughts. We get a lot of questions, Lorne, on all three of these stocks, BCE in particular, which I think has suffered the most damage. And there's, as you know, speculation about the future of the BCE dividend. But you think most of the bad news, including things like cord cutting, negative regulatory environment, those things have been priced in now, you believe?
Right, and we think the bad news is over. Listen, as I say, we added to BCE recently, and our view is we don't just expect the dividend to be cut, we hope the dividend will be cut. All of these companies have been issuing more stock to pay their dividends, and that's a negative for shareholders in the long term, Paul. You should be using your free cash flow to pay down debt or buy back shares. So, this addiction that investors and boards of directors have had to annual dividend increases has not made a lot of sense for investors, and now everybody's paying the price. However, from here, even if BCE's dividend gets cut by 50%, strong possibility, you have BCE with a 5.5% dividend after that, Rogers 5, Telus 7. You don't need much to go right for these companies. The bad regulatory news is probably completely done. And we expect these companies who've also, by the way, as we know, cut costs significantly, they are poised to start showing modest earnings growth, and it won't take much to deliver double-digit returns over the next few years from here.
BCE, of course, is the parent of this television channel through its Bell Media division. Would BCE's share price take a near-term hit if it did announce that dividend cut?
Our view is, if anything, it might go up when they announce the dividend cut. The reason is they would redirect some of that money to debt repayment, put them on a sustainable path. The whole world is expecting BCE to cut its dividend. As someone told me many, many years ago when I started, when you see a 10% plus dividend, the market is talking to you. The whole world is expecting a dividend cut.
What do you think of BCE's controversial acquisition in the United States, Zipley?
So, first of all, we don't know what to think. It's way too early. However, if they deliver any type of return from that investment, they took the money from Maple Leaf Sports and Entertainment and redirected it. They weren't taking any cash flow from their prior investment, so they, it could be a modest positive. Will it be a home run? It's way too early to tell. It's a competitive environment down there, way more so than here. Hopefully management and the board knows what they're doing, and they'll deliver a return that they, is expected.
How important is the regulatory environment where these companies seem to deal with negative policy decisions from the federal government and negative regulatory decisions from the CRTC on a fairly regular basis?
Sure, and listen, I think the bottom line is, especially with what's going on south of the border, is the bulk, the bulk of that action is probably over. There is a goal for, to have strong Canadian businesses here. These companies have suffered tremendously. It's had some impact, although consumers tend not to see very much of it. It has become more competitive. Pricing is a little bit softer. But, we think under any new government, we're not going to see that kind of action going forward. And these companies have slimmed themselves down in a huge way. So margins are actually probably poised to increase.
Rogers Communications, of course, the big development in Rogers' recent history is the enormous acquisition of Shaw. The stock, however, Rogers stock, is trading now at its lowest level in almost 10 years.
Sure, and it fits in the same category. One of Rogers' issues is it's a controlled company with dual-class share structure. So the company's heavily into sports, and does that make sense or not? Who knows? Although the value of those sports franchises has risen if you look around the world and look at that type of thing. But the Shaw acquisition has been integrated, and again, it should pay some dividends to Rogers going forward. All of these companies, and Rogers included, for us, there are double-digit gains to be had from here.
Okay, any thoughts on Telus to close out our discussion of the big three?
Telus has done something completely different from everybody else, which is that they've invested money in call it venture capital type investments and other types of things. And Telus, so there's other parts of Telus, and it's actually worked out very well for them. They're also been better positioned, I think, out west as well, with a little bit less competitive pressure, let me say. They have a higher dividend yield, and we don't expect that dividend to go up very much over the next few years. But with a 7% dividend yield, you need very little to go right to deliver a 10% return. And Canada remains a growth country. Even if we have somewhat lower immigration growth, we're still going to have immigration growth, and that's going to drive all of these companies.
Okay. You consider all three to be buys at this point, do you?
We own all of them, and we consider all buys.
Lorne Steinberg on the telco company.